If you owe money to the IRS, what's a tax lien? Let's talk about liens. If you owe money to the IRS, they have a lien against you by law. So there's a statutory lien and there's a notice of federal tax lien. People often get this confused, even in my community of tax professionals. There's a notice of federal tax lien, there's an actual statutory lien. What's a statutory lien? It's basically by law, if you've been assessed taxes, you've been sent notices you're not paying, then by law, by operational law, there's a lien against you. Okay? And the lien attaches to everything you own or may own in the future, including cash. Okay? So that's really important as well. So a client of mine was trying to get his property refinanced, and with the lien in place, we're able to maneuver around that, if you will, to get that lien, get the property refinanced. And actually in that particular instance, I'm not going to say it's going to be the same way in every case. Every case is different, but in that particular instance, they didn't have to fork over any money to the IRS. Didn't have to pay the IRS a cent. They still owe the debt, but they were able to refinance, get cash out. And it was really important because the taxpayer was really ill, and there was money that was required to help her with her hospital bills, right? So she since passed away, God rest her soul. But it was really important that they get the money out to help pay some of those bills. So it can be done. There are different avenues or tools in which to get around liens, legitimately get around liens. That could be an entire session on its own. But just know that it's definitely possible to get that done. But back to what I was saying before, the notice of federal tax lien is not the lien. The notice of federal tax lien simply puts other people on notice that the lien exists. So you go to your creditors, and those people, they will know that you have, if there's a notice of federal tax lien in the ethos, people will know that you owe the money, and then creditors may shy away from you, okay? Because it's a public record, all right? So they file it with the county clerk's office, and you just have to be aware that if you owe over a certain dollar amount, you may be subject to liens, okay? A little bit more about liens. You cannot sell or transfer property covered by a lien. But as I said before, there are ways to get around that without requesting a certificate of discharge. And where that's concerned, it allows you to transfer the property to a new owner using a form 14135. That's what the certificate of discharge does. It may be issued if the fair market value of property is double the sum of the amount of the tax due plus interest and penalties. Okay? So basically, the IRS wants to know it's going to be able to collect. All right? And that's what's important with that. So when you refinance in real estate, you must subordinate a lien to the new mortgage. And for folks who are in the real estate space, just be aware that there are ways to close your deal, right, even with a lien attached to the property. So if you have any questions about that, definitely feel free to give me a call and we can discuss it further. The bottom line is the IRS wants to get paid. They want to get paid. Sometimes they get paid at closing table. Sometimes they get paid whether it's a refi or a sale or whatever, or a purchase, depending on your perspective. They want to get paid. It doesn't matter. And don't expect the lien to be completely removed until you've settled the debt. Okay? So if you're in a payment plan scenario, let's say you're paying over time, the lien is going to stay in effect until you finish paying.